a house that you will never actually own, a three-digit number that decides your human worth, and a banking system that would instantly collapse if everyone paid back what they owed. By the end of this video, you will understand that debt is not a mistake you made. It is a product you were engineered to consume. You are about to discover how the global economy was deliberately redesigned to turn your future labor into their current profit, locking you into a cycle of indentured servitude that looks like freedom but feels like a cage. Stop looking at the interest rate on your credit card statement. Look at the calendar. Look at the next 30 years of your life. They told you that debt is a tool. They told you that a mortgage is good debt. They lied. Debt is not a tool. It is a time machine. But it only travels in one direction, backward. When you borrow money, you are selling your future time to pay for your present desires. You are eating your own tail. The stakes here are not financial. They are existential. Why can't you quit the job you hate? Because of the mortgage. Why can't you take a risk and start a business? Because of the student loans. Why are you too tired to protest, to organize, or to demand change? Because you are working two jobs just to service the interest. This system steals your most precious asset, your agency. It turns free citizens into obedient workers who are terrified of losing their paycheck. They haven't just monetized your wallet, they have monetized your anxiety. To understand how you became a battery for this machine, we have to look at the blueprint. It isn't a conspiracy, it is simple arithmetic. It operates in three phases. Step 1 is the setup, the fiat trap. We have to go back to the 15th of August, 1971. President Richard Nixon took the US dollar off the gold standard. Before this, money represented value gold in a vault. After this, money became debt. In our modern fractional reserve banking system, money is created only when a loan is issued. If you go to a bank for a mortgage, they don't give you money from the vault. They type numbers into a computer. They create that money out of thin air. But here is the catch. They create the principal, but they do not create the interest. There is always more debt in the system than there is money to pay for it. This creates a game of musical chairs. Someone must go bankrupt. The system demands it. To keep the economy growing, we must constantly create more debt. If we stopped borrowing, the money supply would shrink, and the economy would die. Step 2 is the trick, the wage squeeze. So, the system needs debt to survive. But how do you force people to borrow? You make it impossible to live on a salary. Since the 1970s, worker productivity has skyrocketed, but real wages have flatlined. Meanwhile, the cost of the American dream, housing, education, healthcare has exploded. This cost of living crisis is not an accident. It is the mechanism. They created a gap between what you earn and what you need to survive. Then the bank stepped in and said, "Don't worry. Here is a credit card. Here is a loan to bridge the gap." They disguised a systemic failure as a personal liquidity problem. You aren't borrowing to buy luxury. You are borrowing to buy the standard of living your parents had on a single income. Step 3 is the proof. You want the smoking gun. Look at the Bank of England's quarterly bulletin, Q1 2014. For the first time, a major central bank admitted the truth in writing. They stated explicitly, private banks create money when they lend. They debunked the money multiplier theory taught in textbooks. They admitted that the banks are not intermediaries lending out savings. They are creators of credit. Or look at the household debt statistics. In the US, total household debt hit $17 trillion in 2023. We are drowning. But notice how the banks react. They don't help you get out of debt. They invented the FICO score in 1989. They gamified your servitude. They trained you to be proud of your ability to borrow. A high credit score doesn't mean you are wealthy. It means you are a good yield. It means you are a profitable host for the parasite. So, who wins in this casino? The asset holders. This is the wealth transfer. When the banks create cheap money, debt, it flows first to the wealthy. This is called the Cantillon effect. They use this cheap debt to buy assets, houses, stocks, companies. This drives up the price of assets. You, the worker, get the inflation. Your rent goes up, your grocery bill goes up. But the rich? Their portfolio value goes to the moon. And the banks? They package your mortgage into a mortgage-backed security and sell it to a pension fund. They don't even hold the risk. They collect the origination fee, sell the debt, and wash their hands. If you default, you lose your house. If they default, the government bails them out with your tax dollars. It is a privatized gain and a socialized loss. They have built a perpetual motion machine that sucks value from the bottom and sprays it to the top. We used to have debtors' prisons. If you couldn't pay, they threw you in a cage. They realized that was inefficient. You can't work if you are in a cage. So they removed the bars, but they kept the chains. Today, the prison is invisible. It is the monthly payment notification on your phone. It is the fear that keeps you silent in a meeting. It is the exhaustion that keeps you compliant. You are free to go wherever you want, as long as you make your payment on the first of the month. The question isn't, how do I get a better credit score? The question is, how much of your life are you willing to sell to buy things you don't need, to impress people you don't like, in a system designed to make sure you never have enough?